Hello from the Dugascopy TV studio in Geneva. We're talking about investment possibilities in a low-yield environment with Christian Zeitler. He's country head of Legg Investment Switzerland. Mr. Zeitler, welcome to the studio.
Thank you very much for having me.
So this is a zero or even negative rate environment. So how do asset managers try to get some returns for their clients' investments these days?
It is not easy, but the asset management industry as a whole, we and our competitors, have come up with flexible solutions that still allow investors to get positive yields, higher yields that we would get in a normal treasury bond or government bond. These strategies have all one thing in common. They are unconstrained from a benchmark and they're very flexible.
Mm-hmm. So what are strategies and what are benchmarks currently that exist in the market?
For instance, if you look at the bond market, the most used index in the pensions world and in banks is the Barclays Global Aggregate, formerly Lehman Aggregate. Trillions of global assets are benchmarked to that. It has a few flaws, as everybody knows, but it's very widely used.
Mm-hmm. Can we a little highlight these maybe disadvantage of a benchmark-oriented approach?
Benchmarks have advantages. They have a known risk profile, and you know exactly what you buy. The disadvantages, especially in the bond area, are many. So, for instance, for the Barclays aggregate, you have a very high allocation to government bonds, which don't yield anything at the moment. And for instance, in the Barclays, you have a very high duration at the moment. The Barclays has a duration of 6.5 years at the moment, which for an investor means if interest rates go up by 1%, he roughly loses 6.5% of his capital.
So what can investors expect in this negative or low yield environment? What do you recommend to your customers?
We think customers have to choose very flexible strategies, as I mentioned earlier. What we would recommend to our clients is diversify. You can either go into high yield bonds, you could buy emerging market bonds, you can buy high dividend stocks. But ask your client advisor in your bank what he would recommend as an absolute return strategy. Ask him to identify the 3-4 top products in that area and invest in 3 or 4 of them. I think that's a strategy that can diversify your risk and you get positive returns. That's what you want.
Mm-hmm. Mr. Christian Zeitler, thank you very much for being here today and sharing this information with us.
Thank you very much.
And thanks for watching. Do make sure to keep clicking back on the Dugascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.